Welcome to Value Investing webinar. We are here to talk about how to spot stocks on a sale. Frequently, we all like sale. We always like things are on a discount. And why are we talking about it? Because market is at an all-time high. But it's only on these occasions, we are living in a very anxious time. The election result is around the corner. There have been occasions when election result comes as a surprise and it has hit the market by very severely. I can recall 2004 election when the market fell by 20%. 20% in a day, it was almost like a flash sale. Then, in 2006, we had a similar thing, 2-3 sessions and the market was down 15, 17%. So, not that, we are not in the middle of sale. Market is at a different level altogether. It is at its highest in terms of relative expensive, how expensive it is. But how to prepare yourself for that? Just an opportunity comes your way, how to capitalize on any such opportunity. Of course, that requires a great deal of courage, great deal of foresight in terms of, if you can do it only if you have thought through it well beforehand. So, to discuss all the tactics and the strategy that you should have beforehand is Atul from Quantum Asset Management. Welcome Atul to discuss about, as usual, value investing, but waiting for the sale. Any such opportunity comes your way. So my first question which we want to know is, theoretically we all know that value investing is all about getting more than what you pay for or paying less for what something is worth. So, and this is where the subjectivity comes in, arriving at what its real worth is. But how do you identify something like that in a market which is at its all-time high on the price-earning ratios on the Sensex? How do you do that now?
So, thanks, Dhirendra, for having me here. Obviously, it's relatively market is looking a little in terms of pricing the P of Sensex closer to about 28 times on a trailing basis. So, definitely not not a cheap kind of a market overall. From stocks perspective, so again it is much more driven by sectors. So there are sectors which are priced very highly. For example, we look at many of the consumer stocks, their P's are in the range of about 70-80 times as well. And obviously there have been some sector stocks which have not been in such kind of a valuation zone. So there are few of them, for example, sectors which have not been doing well, particularly after the issues which happened in around September of 2018, when one of the bigger non-bank companies went bust, and after that we did see some kind of issues which were there in terms of
That was the ILNFS thing was quite a blow. Yes,
correct, and that did have impact on a number of sectors. For example, some of the finance companies did face problems. We saw problems happening on some of the real estate side of it, for example, because they were a lot dependent on many of the finance companies, because traditionally they used to get a lot of their funding from banks, and over a period of time finance companies they turned out to be more willing to take more risk, and they had funded a lot of that. Similarly, we saw that we do not know for reason it is sure to do with finance, but auto stocks were also something which have had seen a kind of a problem. So there are a number of sectors which have not done so well, and obviously valuations are higher on some side of it.
Okay. So you are still getting avenues to buy. You still buy when you come in the morning and you have inflows from investors. You are finding avenues to buy.
They are relatively limited as compared to where they were. For example,
6 months back or 1 year ago?
around 6 months back, or even in the month of March, we saw a lot of flows happening. The the BSE Sensex that rose by about in the range of about 7 to 8% during that month itself. There were a lot of flows which were coming from the foreign guys, and I mean, with the change in the Fed stance where they were looking at maybe no further rate hikes, so that did have an impact of lot of flows coming from the foreigners. So that probably before that, maybe the markets were looking to us from a bottoms up perspective, much kind of an attractive. But I think so in the past, I mean, while still there are opportunities, I mean, from a perspective of, let us say, what we are holding, but in terms of new ideas, etc., from that perspective, we are not
You're not
seeing,
getting you're not coming across new opportunities to invest. Okay.
yes, they are limited. I mean, the stocks, maybe they have to fall somewhere for us to get into them.
Okay, now let's get on to the headlines. How to spot stocks on sale. And let me give you the context. Nowadays, we don't have a lingering down market where generally the market, what was there in the period 2001 to 2004. The market did not go anywhere and did not go anywhere for a long time. And people thought that investing is all about fixed income investing. Nobody wanted to touch stock. And then we came across, so since 2004, I haven't come across a market where market has been lying low and nobody is interested for a long period of time. And then in 2004 we also saw that a government was expected to come and it did not happen, and market went down by 20% in a single day, in just 2 days. Then in 2006 we had 16% fall in 3 trading sessions, which was once again unexpected government move. Then we had the subprime crisis, and around October, the Lehman crisis. The market tanked and went down to 8,500 on Sensex in such a brief period of time. But it did not continue like that for a long time. It was almost like a flash sale, the way these online retailers do it, that 3 days discount. So once we have a flash sale kind in the stock market, do you really anticipate that, do you have any degree of preparedness for any such occasion?
From stocks perspective, I would say that we are always prepared to buy because constantly we are researching many of the ideas, irrespective of where the markets are. So in
No, but
terms
assuming
of
that market goes down by 15% in a single day, what will you buy? Will you have some mechanism whereby you will have your priorities set at that particular point?
yes, we would have. So I mean, we are always working on
Besides
that.
cash preparedness.
Correct, yeah. So, I mean, one is that the market activity perspective, we will not be transacting so much. But let us say from a research perspective, we will always be on our toes. We will
You will not be on the lookout for opportunity to buy on that occasion when 20 market goes slips by 15, 17.
Yes, we will always be ready for that. So, once that happens, I mean, we will have our meetings and we will I mean, exactly. We will. The stocks. I mean, because they are anyway discussed and looked at. It's just that we are waiting for the right price. The moment that right price comes, then obviously we will jump into and we will buy into those stocks.
Do you recall any such instance, 2004 or 2006?
Yes, so 2004 the fund was not there, but 2006 was surely that we were there. I remember that a part of the problems that happened in 2006 was because of the unwinding of the yen carry trade, which was very popular at that point of time, and then suddenly people were just exchanging the money and moving into yen because the interest rates were very low, and then suddenly the interest rates started to rise in Japan, so which led to the unwinding of the whole yen carry trade. So I mean, I remember that at that point of time we were surely there into the stocks, we were buying into stocks, though to tell you that at that point of time, I was not there as a portfolio manager. I assumed those responsibility only
But
in
you were very much
November
part
of
of the process.
2006. Yes, but I was part of the research team, and we were at that point of time looking at the ideas. Come 2008 again, if I can just
Yeah, sure.
pre-guess what you are going to ask. So in 2008 again, we were, while there was a lot of nervousness when we were looking at it, we were looking at the stocks were giving us very, very good upsides, and our portfolio upside at that point of time, that looked in the range of upwards of 100%. And at that point of time,
You thought it could double the money.
yes,
You could double the money
there was
if you bought
clearly
it
an
that way.
opportunity to double the money, and that was also the point when we probably had one of the highest stocks we ever had during the history of the
Just
fund.
give me some examples.
Yeah, for example, there were a number of stocks, whether they were consumer stocks, whether they were in the space of capital goods,
Simply
in
dropped
the
by
space
50%,
of
40%, 50%.
yeah, there were many of the stocks which were like down by a huge kind of a 30, 40, 50% kind of levels. And we were just able to, that gave us on our palette a lot more kind of choices.
Were you
And
not
we were-
scared because on a free fall when you buy today and it falls again and then it falls again because it's
Correct.
market is so was that not scary? Where
Yeah,
do
to
you
a
have
certain- yeah.
do you have a tactic to deal with that, your own anxiety?
Yeah, so in one sense, obviously, value investing is many a times you are catching a falling knife. So it does hurt because you buy stocks and it falls further. But then we again have a process which is much more disciplined kind of an approach which we have followed. And if stocks are coming to our buy levels, we are going ahead and buying them. So at that point of time, maybe we were sitting at stocks which were in the range of about 36 stocks, 36 to 37 stocks, is because many stocks were coming and we also wanted to diversify our portfolio. Cash level at that point of time came
You
to
could get new stocks too. You can add new stocks to your portfolio as
yes,
well.
we would like
Suddenly
to
they became
have
attractive.
we would like to have that. And then our cash level was as low as about 2% kind of levels. So except for the redemptions which could come at any point of time, that point of time, even
You
the
had
fund
that
size.
kind of cash preparedness for that?
Yes, so just before because in 2008, as you would remember, that markets going to close to about 20,000 peak that they made somewhere on 8th of January 2008. That was the time, and at that point of time, our cash levels would have been about 17-18% in the fund, because we were looking at many of our stocks, very hard to justify to hold them into the portfolio. We looked across sectors, except for a few, maybe to do with consumer staples. Those stocks, some of them were not doing well, but that apart, the whole markets were, let us say, on a valuation level which was very high, and that was backed by very good corporate performance also, which happened from the period of 2004 onwards till 2008.
What are the risks when you have this kind of flash sale in the market? What one should be conscious of? What are the risks involved?
Yes, so when we are looking at stocks, obviously one is that
No, not about you. You get paid to buy stocks for us. What should an individual investor be wary of? If you can actually think in terms of 3-4 thumb rules which he should follow.
yeah. So
You do it for a living. You come at 9:30 in the morning to work till night, just doing this.
correct, yeah, but that is true. But like anybody else, everybody is has the same kind of a psychological fallacies. We are all human at the end of the day. But a few things which we have looked at. For example, every crisis could be something new. For example, let us say the 2008 crisis was a lot about leverage, kind of this thing, money suddenly becoming cheap. People who were, debt was available to you and people were taking it for granted. They were borrowing money in India, they were borrowing money abroad, and people were borrowing money in foreign currency, and they were
Money was
saying
available
that,
for nothing.
Exactly. Yeah. And then they were also gambling. They thought that the 41
Money for
rupees
free,
to dollar is going to come to 30 rupees or 35 rupees. So I am going to make gains not just from my business, but more from borrowing and getting into those kind of activities. So one lesson was obviously, and it remains in many of the crisis periods, is that the companies that one is getting into, they should not be excessively leveraged, and that has come across many times. For example, some time back, the infrastructure related problems were also had to do a lot with the companies were leveraged to a certain extent. So that is one part of it. The second is obviously that one has to do the homework properly. I mean, many things will fall, but something could fall for a reason and something could fall because of fear. And there has to be a distinction between the two, that a business could be good.
So know the business.
Yeah, you have to know the
Know the
business. You
business,
have
keep
to
away from leverage. Two takeaways.
correct.
What
Yeah.
next?
Yeah, and the next one is obviously that all across one has to be invested in companies that have good corporate governance, kind of an uh, good corporate governance. We are very comfortable with the
Very
numbers.
hard to guess, no?
Yeah, but for example, let us say Satyam was something
Very
which,
difficult to guess.
I mean, if probably, yeah, a little difficult, but let us say, for example, in our case, we were not there. I mean, again, as you say
No,
that.
it could be, it could be a chance, because Satyam was something which caught unaware everyone. It was fraud of a massive kind, and it could not be spotted on the balance sheet, on the P&L account, unless you are doing something forensic, which the management was extremely, it was in fact predisposed to doing those kind of fraud, faking things up, making things up which did not exist. So those are, of course, it's an outlier, but generally, we are coming across a lot of these, the debacle right now. Do you have any lesson from on corporate governance, or poor management, if you can actually have one or two thumb rule to avoid?
From a, I mean, from our perspective, obviously there is a history which is there, that has somebody done it in the past. So that is one way of looking at it. So if there has been any kind of a case in the past and there is the same people are running that business, so obviously we would not like to get into those kind of businesses. So that is one way of looking at it. Then obviously there can be issues such as lot of inter-party kind of transactions, etc., which can
How
be there for
hopeful are you of a flash sale coming our way?
very difficult to guess the timing, but I would say that I mean, there can always be events which could happen. For example, let us say in September, nobody would have thought that the markets are going to correct to the extent that they did, because we are also living in much more interconnected kind of a world, as you were discussing before we came into this interview. So there can always be I mean,
Some kind of
possibilities.
external thing which drags the market substantially in a brief period of time. All right, thank you. So let's hope that you get an opportunity and benefit from his insights. Now we move on to questions. Oh, this is a question which I don't know how to deal with it, which is Abhinav is asking that how can I identify good micro cap or penny stocks, and what are the risks involved? So no, forget about micro cap or penny stocks, but when you look at a value situation, do you have a minimum threshold below which you don't see?
Yes, we do look at in terms of what kind of volumes are done in on the exchange.
But
So
assuming there is a 200 crore company and you can well buy 20 crore worth of that stock and it trades actively, and you can buy 5 crore worth of that position, and it could also be a not so insignificant position in your portfolio, what do you do?
so I mean, first thing is obviously that it has to trade.
Yes.
Suppose that it trades, it meets our criteria, and we are comfortable with the management, we are comfortable with the business. We could go and
That is, size is not a barrier.
yes.
All other things being in place.
Yes, as long as it meets that the volume criteria, that it is trading at least about.
So now I'll get on to this. I'll just
about
repeat the
6
questions
crores.
once again. How can I identify good micro cap and penny stocks? What are the risks involved?
Yeah. So the risks involved can be many. For example, especially one goes lower down the scale over there. So, for example, the quality of management to their overall business
But
scaling
all the
up.
big companies started small, no?
Yes, they all
And once they
started.
have proven, then there is no such opportunity.
Yeah, that is true. But
So that's
then,
the whole idea of looking for a penny stock or a micro cap, where somebody can actually ride from 100 crore to 5,000 crore. The money to be made is much more.
yeah, that is there. But then you also have to look at how many of the, let us say, of the maybe 10,000 companies that started maybe small, how many of them became a large cap or a mega cap. So the survivability, the people who are backing is also very, very important, because India is a very, very unique kind of a market in terms of, let us say, apart from the corporate governance side, the management's capability, their bandwidth is very, very important, because India is a different country, because the language changes every 100 kilometers, the tastes are very, very different. I mean, the flavor could be, people in north could be loving red as a color, and the south the choices could be very, very different. So India is not, let us say, if one has to compare, for example,
market, yes.
yeah, US etc could be a much more homogeneous market, whereas if you look at Europe, I mean, the countries by their size, by their difference of languages, by preferences, it's a very, very heterogeneous. So it is difficult for many companies to scale. I mean, it's not that easy.
Okay, Abhinav, Atul is scaring you that small companies could be dangerous. But
I'm not yet trying to scale, but yes, one has to be cautious.
But yes, you are conservative, and that's fine. But understand, this is worth appreciating, that small companies come with its own set of risk. The way to do it, but it's worth the attempt, and fortune favors the brave. So try and figure out things yourself. Good companies, but it's hard to discover good companies with quality management, with scalable bandwidth, and a management which will but the rewards of that, spotting an Infosys in 1993, the rewards are substantial, but nobody knew, and it was very risky then. Likewise, spotting a Sun Pharma 15 years ago would have been a bonanza. But for every Sun Pharma or every Infosys, you will have a DSQ software, you will have a Satyam too. So be aware of that. The way to deal with it is understand well, diversify, and then try and keep learning. Anjali has this question: what is your opinion about earning potential in consumption or FMCG sector over the next 1-2 year period?
Yes, so I mean, many of these stocks.
I'm little unsure that whether she's asking about companies earning potential or stock gain potential. Yes. But nevertheless, let's think in terms of earning potential.
Yes, so I mean,
company's ability to grow its earnings.
Correct. Yeah. Without pinpointing, I think we have seen that many of these consumer stocks, maybe their volume growths have been in the single digit for the larger kind of
that has
players.
decelerated. They are not growing as fast as they were.
Yes, I mean, that's the nature of the business, in the sense that I mean, overall, let us say one looks at the volume growth kind of a level, they are probably single digit, maybe on the higher side, or early double digit kind of a numbers. And then they have, some of them have pricing. So probably you could get a, let us say, overall numbers in terms of what the nominal GDP growth could be. In terms of their sales growth, probably some of them, the good ones, yeah, they could grow in the line of the nominal GDP, and then again it comes to some of them could have their margins improving, staying same, or or declining. And with that, probably maybe it could be somewhere in the range of around nominal GDP growth is where some of them.
What about their gain potential, stock gain potential? Do you think they are priced to perfection, that making money from here given this kind of growth? Because this is not great growth, which Indian investors have been used to, 15, 20, 25% for a couple of years, and things change come dramatically. So what is your understanding of, what is your view on the general valuation of the consumer stocks?
Yes, so I mean, there are arguments on, I mean, both the sides. Some people, I mean, can say that probably that they have a lot of, let us say, defensiveness, and there is a lot of predictability on the overall side. Let us say, in terms of the earnings, they make good kind of ROEs, which if one looks at the core ROEs, they could be in excess of 50% or even more. But let us say from a value investing perspective, given the valuations where they are in terms of let us say 70 times or 80 times, those kind of numbers, from that perspective, maybe from a value investor perspective, I mean, to hold that will
They
be
are
a
not cheap.
little yeah.
They are not cheap and they don't fit in your framework today.
Uh, yes, I mean from a valuation perspective,
They
while
don't. Okay.
one would love to hold many of those stocks, but the
Companies
valuations
are good,
are
prices not.
yeah,
Yeah.
correct.
Okay. This is a question which I don't think we will have a straight answer to. Shivakumar is asking, R. Shivakumar is asking, what should be criteria to choose a value stock for investment during a volatile market condition? I think this is an ongoing challenge. So I think we have dealt with this question in detail just a short while ago. Debashis has this question: how can one determine whether buying a particular stock will be profitable or not? So, how do you actually do the astrology?
Yes, I mean, obviously, getting into everybody looks at making money out of those that particular stock, and I mean, for us, it is always that if we are buying it at the right price, I mean, given our buy levels are at the right price, from those levels, obviously, I mean, one should look at making returns which are in the range of about, let us say, we would look at maybe around 40% kind of returns is what we would look to make out of those particular stocks. And I mean, until unless the business changes very significantly, I mean, one should be able to, let us say, there are some kind of until unless there are some major change in the whole business model itself. I mean, it is deteriorating or something like that. Until unless that happens, hopefully one should be able to realize. So I would say the key is buying it at a right price. That would be.
Arun has this question that how can one calculate the next breakout or how can one anticipate the next breakout of Sensex or Nifty? I want to answer him directly. You can't. You don't. And because anticipating the next breakout, but there are occasions when it happens. Very difficult to anticipate even then. Market has dragged for a long period of time. Things look cheap. They are at a historical cheap level. Nobody is interested in stock. And so they are ready for a breakout. One fine day, people wake up and they say that, oh, the market looks very cheap. But then, even then, when it is completely looks like the market has gone to the dogs, still it looks very difficult to anticipate when will be the next breakout. Because I have seen some of those persistent declining phase of the market for a couple of years. Nobody is interested in stock. Markets look cheap. All companies are available very cheap, and nobody is buying because everybody thinks that if you buy, you don't make money. And then one bump up, and people start queuing up. So, very difficult to guess that. Diganta has this question that when are the small and mid cap indices expected to move in sync with Nifty? Even this I'm little tempted to answer, but I would like you to answer it.
So what we have seen that since 2013 taper tantrum, the small and mid cap index that performed much better than Sensex, and we have seen that 4 years continuous, the small and mid cap did had a very good performance and outbeating the benchmark by a very wide margin. It was only towards somewhere last year that the correction started to happen. That's what I would like to say. From a historic perspective, maybe how do you see you can.
I don't know. What you're saying is right that small and mid caps had a great run till 2017 and then they corrected, and large cap did not go up for a long period of time. If you look at, and even the large caps which has got, the Nifty or the Sensex, when it has gone up, it has gone up primarily with driven in a very narrow fashion, 3-4 stocks driving the Nifty and Sensex up. uh, from that standpoint, and stock large caps are resilient. uh, Whenever there is, the markets are tough, Large caps survive and they corner a larger market share. Small caps struggle. They have all kind of problems which booming economy. So large caps have their strength. Large caps are large caps because they were able to outmaneuver the others. So they have their own strengths. I don't know. There are two views here. In fact, I was talking to a very seasoned fund manager, and I was asking him that is the correction in small and mid cap over? He said that the train has left Mumbai and it has only reached Ratlam so far, and Delhi is still far off. So I don't know. The Delhi for small caps may still be far off, but I don't know. It's hard to guess on for an index. Ganpati has this question that what among the following three categories should I choose to invest in 2019? Large cap, mid cap, or small cap funds? Oh, this question is straight into my lap. And I would say that don't do any. Choose a fund which can invest all across, and so you will be giving flexibility to the fund manager. You won't have to worry about it. It will cause less anxiety, and make sure that you are doing your SIP, not making lump sum investment. Make sure that you will be doing it for a couple of years, and make sure that you are investing the money which you are unlikely to need for 5 years, and things will get sorted out nicely for you. So thank you very much, Atul, for giving your insights, sharing these insights, and answering these questions.
Yeah, thank you, Dhirendra. It was a pleasure to be here. Thanks.
Thank you.